Welcome to Richie Shot.
Today we will see how Ethereum broke another record weekend, Powell's effect after Jackson Hole, and touch upon oil prices. If you are ready, let's dive in.
Bitcoin rose, and then it stumbled.
Friday, the world's largest cryptocurrency broke past $117,000. The spark came from Jackson Hole, where Jerome Powell suggested a rate cut could arrive in September. Hopes soared, traders rushed in, and Bitcoin touched the skies. But by Sunday, the fire had cooled. Bitcoin slipped more than 2%, sinking toward 112,500. A brief rally, undone in hours. Why? Analysts say the answer lies with the giants of the market, the whales. Holders so large their moves ripple across oceans of liquidity. And lately, those whales are swimming away from Bitcoin and into Ethereum. Blockchain firm Look On Chain spotted the shift. One whale wallet sitting on more than 100,000 BTC rotated part of its treasure into 62,914 ETH. Then it doubled down, opening a derivatives long of 135,000 ETH. A bold bet on the challenger. The trend is wider. Spot ETFs tied to Ether are drawing steady inflows. Bitcoin ETFs, meanwhile, tell another story. Weak demand, small inflows, even outflows through August. Bitcoin's dominance has slipped to 57.9%, down from 61% just weeks ago. Numbers, yes, but they tell a tale of changing loyalties. The king is still on the throne, but the court is shifting its gaze. And Ethereum stands in waiting. Trading around $4,712, just shy of its new record above $4,946, it has momentum on its side. For years, Bitcoin has been the first chapter of the crypto saga. But markets write new stories every day. Today's story is this: the crown may not yet change hands, but the challenger is closer than ever.
Power effect. On USD, Reuters reported Monday that the US dollar attempted to steady itself after suffering its sharpest drop in weeks, driven by expectations that the Federal Reserve may soon cut interest rates. The greenback edged up 0.2% in early Asian trading, trading at $1.1699 against the euro. Still, it hovered close to Friday's low of $1.1742, the weakest level since late July. The dollar also ticked 0.1% higher to $1.3502 against the British pound after sliding nearly 1% in the previous session. Versus the yen, it recovered 0.4% to 147.46, trimming part of a steep fall from Friday. The rebound followed a pivotal speech from Fed Chair Jerome Powell at the Jackson Hole Symposium. Powell signaled that the central bank could lower borrowing costs at its September policy meeting, warning, "Downside risks to employment are rising, and if those risks materialize, they can do so quickly." Market participants quickly adjusted their outlook. Traders now see an 80% chance of a quarter-point reduction in September and expect close to half a percentage point in cuts by the end of the year, LSEG data showed. Earlier in August, bets on easing accelerated after weak U.S. jobs data, though they were later tempered by stronger inflation and business surveys. At the same time, the dollar has faced added strain from political tensions as President Donald Trump escalated criticism of Powell and other Fed officials. Trump recently targeted Fed Governor Lisa Cook, threatening to remove her over mortgage allegations, and has accused Powell of mismanaging rate policy and overspending on building renovations. Bank of Japan to raise rates. Japan may finally be turning the page on its long deflation story. Bank of Japan Governor Kazuo Ueda sounded upbeat this week, saying that wage increases are no longer confined to the country's corporate giants. Instead, they're spreading across the wider economy and picking up speed as the job market tightens. For years, weak pay growth and falling prices locked Japan in what many called a deflation trap. Companies hesitated to raise wages, households reined in spending, and the cycle reinforced itself. But Ueda believes those days could be fading. He pointed out that labor shortages are now one of the nation's most urgent issues, forcing businesses to offer better pay to compete for talent. The COVID-19 pandemic also played its part, sending a wave of global inflation that jolted Japan out of its deflationary mindset. With prices and wages moving upward together, Ueda sees the foundation for change. His optimism adds weight to expectations that the Bank of Japan could restart rate hikes later this year. The cycle was put on hold as U.S. tariffs hit Japan's export-led economy, but investors are betting the pause won't last much longer. If wage momentum holds, the central bank could soon shift away from its ultra-loose stance, marking a fresh chapter for one of the world's most watched economies.
Spotify will make listeners upset with a price increase. According to the Financial Times, Spotify is preparing to raise subscription prices again, news that might make some listeners sigh. But the company insists the extra cost will go toward new features and its ambitious goal of reaching 1 billion users worldwide. Co-president and chief business officer Alex Nordstrom told the FT that higher fees will be rolled out alongside new services designed to make the platform more valuable. Price increases and price adjustments and so on, that's part of our business toolbox, and we'll do it when it makes sense, he explained. The company hasn't shared details, but earlier this month, Spotify announced that from September, the price of its individual premium plan will climb from €10.99 to €11.99, about $14.05, across regions including Europe, Latin America, South Asia, the Middle East, Africa, and the Asia Pacific. Yes, it means paying a little more each month, but Spotify argues that better features are on the way and the extra revenue will help strengthen its business. In fact, earlier price adjustments, along with cost cuts, helped the company turn its first ever annual profit last year. For millions of music fans, the trade-off is clear: a slightly pricier subscription, but with the promise of a richer, more innovative streaming experience. Still, for anyone keeping a close eye on their budget, the news may feel more offbeat than upbeat.
Oil prices rose on Monday.
Oil prices steadied in Asian trading on Monday after strong gains last week, as optimism over a swift Russia-Ukraine ceasefire began to fade and the U.S. Federal Reserve signaled a possible rate cut next month. By 21:20 ET, Brent crude futures for October edged up 0.1% to $67.77 per barrel, while West Texas Intermediate also rose 0.1% to $63.72. Last week, Brent climbed nearly 3%, with WTI also advancing. The geopolitical backdrop remains key. U.S. President Donald Trump has proposed a trilateral summit with Russia and Ukraine to encourage peace talks. Ukrainian President Volodymyr Zelensky welcomed the idea, though Trump noted it is unclear whether Vladimir Putin truly wants an end to the war.